Hey traders, PSK2329 here. I wanted to do a video about doing some charting and just talk about some tips that I don't think a ton of people talk about. And obviously everybody looks at charts, and charting is extremely important in my opinion on when you're trying to set up for the next day and you're trying to take a look at the overall market, or if you're looking at an individual stock and where you can identify trends and how to better understand what the move could be moving forward. Because ultimately when you're doing charting and you're setting up for your next day, you want to look at the history, but you're also trying to get an idea of what the future is going to bring. And if you are newer to charting or you're trying to get better at it, here's a couple things that I think may help you, that have definitely helped me be more prepared going into the next day. So obviously today is Sunday the 9th of December, and we just came off a kind of a little bit of a crazy week, but fun week, because we had Wednesday off because of the Bush funeral, but at the same time we had a couple big days with some big moves in them. When you talk about Tuesday, then Thursday's reversal. Tuesday was this big sell-off day after Monday coming into this huge gap up from when we had the Trump-Xi meeting, and obviously the market gapped up huge on positive trade news, and then it just continued to sell off as it, there's a couple things you can notice. I mean, if you follow me on Twitter, on Sunday and Monday, I was talking about how this big gap up was putting us right into this resistance, where over the last couple months, the SPY had really topped out and, kind of came back. And so when we had that big gap up, we were right at this resistance. And the only way it was going to break over this on that news was some massive volume and massive buying. And we just did not see it. It was almost like people bought into, one of the sayings that goes around all the time is buy the rumor, sell the news. You see it all the time with stocks. And, the G20 meeting kind of felt like that. Like we had this huge move for the entire week. Almost like, it was a combination of a couple of things. One is we were coming off the bottom of this support level. But at the same time, it was like people were buying into the news, just saying, hey, at this point with the trade war, there's more upside than downside baked into this meeting, because we were already at a high level of tension, and there was already in place the tariffs to go up to 25% in January, so we were only a couple weeks away from that. So all of that news was already out there. It was already well known. It was already baked into the market, you could say. So people thought, in my opinion, people were thinking that, hey, only good can come out of this. It really couldn't get much worse, other than maybe them getting into a fight. But, obviously that wasn't going to happen. So people bought into this, in my opinion, and then we had that huge gap up. And then right when it came into the market, or the gap up, and the market opened on Monday, it was almost like, well, we really, no trade negotiation was done. There was obviously positive talks, but people just took profits, and we saw the huge sell-off on Tuesday. We were closed on Wednesday. The market gapped down huge. You can see the bottom of this candle. This is where we opened. So we closed here, gapped down to here, sold off some more, and then had this huge reversal. And then we came into Thursday, and the market just sold off even more. So, or Friday, the market just kind of popped and just sold off more, which is exactly what I was thinking when I saw the soft jobs number. There's obviously still some concern and some fear in this market. So if you saw my tweet, as soon as the job numbers came out, I said that I don't think this market is going to rally based on people hoping the Fed is going to start lowering interest rates. One of the things I always say is, and a lot of traders talk about this, is the market is not, hope is not a trading strategy, at least not a winning one. So, and here, I'll share it with you. So here's the tweet I put out. I didn't think that, people are going to buy off the hopes that the Fed might slow down interest rates or slow down rate hikes. That is not a winning strategy. So what happened? We just kind of popped right out of the gate, and then the market just sold right off. So, understanding how the market has been playing and how it's been reacting lately, you could be prepared for that, because so far the market has been hearing tweets. We've been hearing, news here on positive and negative. But the market is not going to react until we get something in writing, whether it's NAFTA in writing, whether it's a trade agreement with China in writing. I think that's the only way we're actually going to see something. When China comes out and signs something, then the market will react. But until then, people are going to take risk off the table. So let's talk about some charting things that you can work on if you're a newer trader. One of the things I always look at when I'm doing my charting, especially on the weekends, is I look at the daily chart, no matter what stock it is, the daily chart, the weekly chart, and the monthly chart. Now, one thing that people don't talk about, I think, is when to use these. So I kind of wrote down a few things. So what you should be doing is at the end of every day, looking at your daily charts. At the end of the week, you want to check your daily and your weekly charts, because you want to wait for that weekly candle to close. Because if it's Tuesday and you're looking at a weekly chart and that candle hasn't closed, there's a big chance that you could get a false direction or a false indicator. So you need to wait till that candle closes to get a good idea. The third thing is check your daily, weekly, and monthly charts at the end of the month. If you follow people on Twitter that are really good at charting, and this is where I've learned it, is, come the end of November, everybody was posting over the weekend their monthly charts, because that monthly candle had closed. So now we can actually say what's going on in the monthly charts. So if you're doing charting, you need to make sure you add in the weekly and the monthly charts to your charting and to your thesis and to your building process. Because the daily is going to give you a ton of information. It's going to tell you what's going on each and every day throughout the week. But when you take a wider lens, so I'm looking at the weekly, and typically I like to look at like 2 years back or even 5 years back to try to see what the overall trend is. And you can even draw trend lines on these things to say, okay, what has been the trend? And I actually removed a lot of them, just so I could get a clearer vision of what's going on. But if we zoom in on the weekly chart, and this is looking at the SPY, the S&P 500, what's been going on the past 12 months or 52 weeks? You can see that we're starting to have some crossover as far as our moving averages are going. Then you have this huge, what I would consider a bearish engulfing candle. So what is that telling me? It tells me that last week was a lot more bearish than obviously the previous weeks, but at the same time that I'm seeing a bearish indication in the market. Now we're still holding the support line for now. This 263 level was pretty well defended on Friday, but that's going to be my key going into Monday, is watching that 263 level, the bottom of this. So if you were just to draw a support line, you could say, look, there's our line in the sand. We break below that, and if we close underneath that for the week, if I'm looking at this next weekend, obviously that's going to tell me if I was right or wrong. But right now, everything is leaning bearish. Then if you look at the daily chart, you can see how we have this top here. We made a lower high here. We made a lower low here compared to over here. So my guess is we're probably going to go back and test this low, this 260. And if that doesn't hold, then we'll probably come down to this next level, these 258 level, which would test the earlier in the year lows. And if that breaks, obviously we'll come down here and test 254s and so on and stair step down. Now the market could keep doing this where we kind of come down, bounce back up, test previous support becomes then new resistance, and then bounce off of that, and then just kind of keep moving our way lower until we get either a China agreement and or some sort of China agreement plus positive trade news. And that's why I think it's important when you're doing your charting is to understand the macro and the micro picture. Understand what institutions are thinking, what they watch, and why. Because right now, you could see just by, obviously these huge moves that institutions, funds are taking a ton of risk or profit or money off the table and moving to more of a cash position. Now, if you follow hedge funds and you follow some smart money, you know that there are just certain stocks that they're never going to sell. There's people that have been in Facebook since its IPO day, same with Apple and all this other stuff. They're not going to completely liquidate all those funds. And the thing I'm seeing and reading a lot is there are a ton of funds that are just sitting on 60 or 70% cash. So that tells me they only have 30 or 40% more to sell. And they're not going to sell 100% of it. So how much more selling is there really to be done? I don't, obviously don't know the answer to that. But at this point, I think the risk is more to the upside than the downside. But that does not mean that we can't keep selling off, that we can't keep going lower. You got to remember, 60% of, $100 billion is still a lot more way we could go down. So, I'm not bullish yet. To me, we still haven't sit in a bottom. I still think there's risk out there. But when I'm saying understand the macro versus the micro is every stock, whether it's on earnings or within the company itself, has its own individual story, has its own micro, news, its own micro events of what's going on. Then the macro picture would be, okay, what's going on in the global sphere of not only banking, but trade. If you look around the world, obviously the EU is in a very bearish situation. China is actually in a bearish situation. Their market has been bearish. Their economy numbers are slowing. And I think that's why Xi is more willing or more wants to make a deal, is because I think their market is actually starting to hurt, and it's only going to continue to get worse, especially if they're not doing business with the U.S. like they used to. And I think that when the U.S. and China obviously lead the global economy, and if we can get something worked out that's beneficial for both of us, that's going to benefit the rest of the world. And so institutions are understanding those macro events, and they're basing their buying and selling on those. They're not looking at the micro pictures of some of these stocks anymore. Now, does that mean they're not buying specific individual stocks? No, it doesn't, because you'll see stocks that have relative strength. There's stocks like bios and other stocks that really aren't impacted by the market or impacted by this trade news. So will a stock or will a fund keep buying a biotech because, it's not going to be impacted by any of this? Absolutely. They'll still buy if there's a good story there, if there's, obviously a good risk reward for them. So the reason I follow the news, the reason I understand it is because I want to know what the institutions are thinking, what the big money, the smart money, what they're thinking, what they're going to do based on the news. And a lot of times you have to read through the news. You have to think about it logically. They're not going to buy in this type of market off of hope or rumors. They may buy into the rumor, but they're not going to hold it. So until we see something concrete or we see something signed, I don't think the money's coming back in. And the fact that the banking sector just keeps looking weak and it cannot rally is not a good thing for the overall market. Now, could they come back if things start to change? Sure. But as of right now, when you're looking at your charting, you want to be looking at, okay, so it's the end of the week. So now you can actually go through, but seeing that we're only in really, the first week of the month, I don't really want to take a ton of time looking at what's happening now. I want to look at the previous months to try to see, okay, you can see where we're kind of in a downtrend. We're making lower highs here on the monthly chart. The question is now, will we break for the month of December where we close at these lows, or will we potentially close even lower? That's what I'm going to be following on the monthly chart. When you look at the monthly chart, it kind of gives you, I'm looking at like a 10-year chart here. You can kind of see if the market really did want to sell off, we could ultimately come back all the way down to this 2016 level and sell off everything that happened in 2017. And if you're a newer trader and you didn't trade in 2017, that's probably a good thing for you. If you did start trading in 2017 like I did, or you know, I first started trading in December of 2016, so I just had my 2-year anniversary, and now going on 8 months doing this full time. You know, 2017 was, you just bought the dip and held. It didn't matter what it was. It didn't matter the stock. You just bought the dip and it went up. You know, that's where I kind of started off as a short seller. That's kind of how I was taught, is to be more bearish or more short. But that's because I came from a penny stock room. And then when I started trading these higher prices stocks, I was thinking, oh, the top, you know, we're going to get a pullback. It's going to sell off. It's got weakness. And I got burned a few times. And that's why I flipped to the long side and started joining more bigger cap rooms so I could understand the moves better. But 2017, we almost have to put that in our memory banks as you know, like an anomaly or something that doesn't happen often. I mean, if you look at the market, you know, there's always been corrections, there's always been pullbacks. You know, 2013 looks like it was a pretty good year, pretty linear. 2014 was a little more flat going into, and then 2015 was more down to flat, and then 2016 looks like it was negative. So 2017 or 2016 kind of had more of an upside, but 2017 was just, I mean, straight up monster. So kind of have to put that in our rear view and and realize that's not a typical market. 2018 been a lot more volatile, which has been fun. It's just understanding how to understand those moves and how to be more prepared going in every day, knowing that you can't just buy and hold. So I hope this helps. I don't want to make this video too long, but the other thing I'll tell you is that every person I see uses different moving averages. The couple that I'm concerned about and that I think everybody uses universally is the 200-day and the 50-day. Those are used by institutions. Those are used by funds. They're used by pretty much every trader I follow that I would consider a pro or somebody who's really good at charting, because they always talk about this death cross. And we just had it on the SPY. And typically, if you go back through history, and somebody posted this on Twitter, I saw it over the weekend, every time we have this death cross, we have more downside. And now that we're in this big artificial intelligence algorithm type trading world, I would not be surprised if next week, you know, this automatically has triggered some sells in some of these algorithms and we start seeing more downside. But like I said, the key I'm going to be watching for on Monday is this 263 level. If we just kind of bounce back up and then fail, and then we come plowing through 263, you know, the next area I'm going to be looking for is 260 test, and then down into the 258s. The question is, how fast could that happen? Well, based on these big volume days, I mean, it tells you it could happen really fast. We saw a lot of volume last week and a lot of unwinding. So again, how much more unwinding is there? I don't know. But I can't believe there's a ton of unwinding left to happen. So could we come down to the 258s and find a bottom? Sure, especially considering that we only have 90 days on that trade agreement. I think that's going to leave a lot more people just kind of sitting on the sidelines. They're not going to be buying. They're probably not going to be selling a ton. They're going to kind of just wait and see what happens the next 90 days, because that'll also, we'll know what's going on with the Fed. Those are I would say the two biggest overhangs in the market. And then also I would say the third is going to be this Mueller investigation, which after Friday's news seems less and less like it's going to be anything substantial. Maybe just some fines or something from potentially campaign finance rule breaking, nothing criminal. So we'll see. But anyways, I hope this video helps. I hope you kind of gives you a couple more things to think about when you're looking at a specific stock. Let's quick look at Amazon. If I go to the daily, for example, this is a good daily to show you, because you could see where we kind of had this uptrend. Now the uptrend was broken over here. Now it kind of looks like it's creating somewhat of a flag. Maybe it does want to have more move to the upside, But to get a better picture, now I'm going to flip to the weekly and say, okay, what's going on the weekly? Now, to me, the weekly is on a nice uptrend. So if we draw a trend line, oops. If we draw a trend line on this, you can see how Amazon is now on this uptrend. So this is kind of what I'm going to be following now, and I'm actually going to leave this on the chart so that I can say, okay, here's my weekly. So next week, when I'm doing my charts over the weekend, I want to see, okay, are we still riding this trend, or are we breaking this uptrend to the downside? And you know, the fact that it actually came back up and tested and then failed and ended the week red is okay, because it's still on this trend. It was just maybe some consolidation. You know, it had that huge gap up. Could we see more upside? Sure. Amazon's a great company. You know, what's the monthly telling us? The monthly is telling us that we're kind of flat to maybe even pointing down a little bit. Again, we are seeing, you see how we had this nice, it's not quite a hammer, more of a doji candle, where doji means more of a indecision, but you can see where it's kind of making a higher low, and it kind of had, it bounced right off of this support line here. And looking at the daily, yeah, this could definitely turn to the upside. Now you can see on Amazon the 50 moving average is getting really close to the 200, and the daily it did close below the 200 moving average. So in order for me to consider us more bullish, we would have to close back up above this 200-day moving average on Amazon. And if it stays below it, I'm going to be more bearish, because that's typically how funds think. That's why they use the 200-day. Anything above the 200-day is considered bullish. Anything below it is considered bearish, as far as the funds go. Because you got to remember, they're looking at the long term. They're not looking at the short term. So, and then the algorithms, obviously, I'm pretty sure they got the program that when we have the death cross, when we have the 50 over the 200, that's a sell signal. So it's going to be really interesting to see what happens in with the S&P 500. And let's see what NASDAQ is doing. NASDAQ has a 2. So the 50 is over the 200, crossed over. So next week's going to be really interesting. But I hope this little charting tips helps. I hope you add this to your list of what you do when you're charting, and it'll help give you a clear vision of kind of what's going on in the long-term trend of your stock. Because regardless of what's going on the daily, if you're starting to notice the weekly make higher lows, and every week it's closing a little lower and a little lower and a little lower, that tells you that the stock is in a bearish trend, even if the daily says, hey, maybe we're just getting a bounce and maybe we're going to go higher. Then you look at the weekly and say, well, no, not really. We're still making higher lows. This thing is still in a downtrend. So, and then obviously when you look at the monthly, you can see when a monthly trend is broken or a weekly trend is broken, that's a strong signal that a reversal is coming. So you can see where the Qs in October broke this, you know, when we had this reversal where it broke the uptrend, that was a strong signal that, especially by the end of October, that uptrend is broke. And the only way that it would be considered bullish is if it got back above that trend. And you could even notice it more on a shorter term if you were watching the weekly chart, because you could see how each week in October we were making higher lows, lower highs, lower highs, lower highs, lower lows. So hope that helps. Have a great day.